What is up, YouTube? Welcome back to Stocks by the Numbers, and today I just wanted to take a quick look at Pilgrim's Pride Corporation, PPC. This is a company that is kind of flying underneath the radar. Kind of reminds me of a GT, Goodyear Tire video I made recently, in the fact that we have a market cap that is not really reflecting the revenue that this company is bringing in. Now, an issue with a company like this is their operating expenses have been increasing, but at the same time, what this company does is it's a chicken company. Right? So prices of everything are going up, and obviously people continue to buy chicken. And as you can see here, the company has hit a new 52-week high today and has been doing so consistently over the last couple of trading sessions. And if we come down here, we're looking at a market cap 7.4. Yes, the PE is a little high at 35.5. But like I always say, at the end of the day, one of my favorite expressions, we have big jumps here on the EPS side, and look at annually, look at these revenues going from a little under 11 billion to 11.5, 12, up to almost 15 billion as of last year in 2021. And if we switch over here to the quarters, look at this slow and steady growth up to 4.25 billion in the last quarter. Multiple upgrades over here, and basically this is a company, again, where the revenues are not being reflected in the market cap. So if you have a company annually, they brought in almost $15 billion, right? And look at this market cap, 7.4. So they're trading at half of the revenue that they're bringing in. And if you switch over here to the financials, see revenue slowly climbing, and the cost of revenue is going up also. But the profits have been increasing on the bottom line as well. So I think, in my opinion, long term, assets are growing even though liabilities are up. But I really think long term that this company is going to continue to keep growing. If we switch over here to TradingView, this is like a 6-month chart. We're looking at an earnings beat back in February. Looking at another earnings beat over here, end of April, excuse me. But as you can see, I mean, right here we have a little bit of an ascending wedge from a technical analysis standpoint. So it could drop down to the bottom of this range here and then break down. But, in my opinion, I do still think it's undervalued. And if we jump out to like a 5-year chart, look at this. This is back in 2017. This thing was north of $38 a share. And at the way at which it's going now, I think we might have a potential sell-off short term if some people want to take profits here as the company's hitting new 52-week highs. But like I always say, look at the revenues, look at the balance sheet, and see if the actual business and the money that the company is bringing in reflects the market cap of the stock right now. And as I said, at 7.4 billion, and they're bringing in 15 billion last year, in my opinion, it's a little undervalued. So here at these highs, should you step in? In my opinion, I might wait for it to sell off. I think if this pulls back below even $29, $28, and you can start piecing your way into some shares in the mid to high 20s, short term, it might get a little volatile. It might get a little rocky, especially here in these markets. We're having a good day today. Obviously, a little bit of a bounce back, up about 2% across the board in the indices. NASDAQ up 1.25%. But, again, short term, it may possibly pull back to maybe like the $27, $28 range. But long term, looking at a 5-year chart, I know it does look a little rocky, but this like $36, $37, $38 level, definitely easily attainable. And if this company continues to be a big producer in the sector, and they keep bringing in that level of revenue, I think we could see $40, $45 here out of this stock. Now, when that's going to happen, it honestly might take a while. It might take a while for this company to really jump up. I mean, we're talking 33 to 50% from these levels. So, ideally, if you're in the company, obviously you want to keep seeing new highs. But I do think in the short term it could sell off. However, long term, I do think it's going back to that all-time high of like that $38 range that we saw here. And I do think it can break out, and you could start seeing $40, $42. I always throw out the same time frame. I say like 12 to 24 months, but that's basically what's going on. Yes, their expenses are growing higher, their operating expenses, and the cost of revenue and profit margins are taking a hit with everything going on in the economy and everything like that. But again, the revenue that they're bringing in is not reflecting the market cap. So just to reiterate again, short term, it might be a little volatile if you step in here at these levels above 30, but long term, especially if you can hold these stocks for 12, 18, 24 months, I do believe that we could potentially see a $40 stock down the line. Now, a company like this, that they're not paying a dividend, and you're basically just going off growth of share price. So that's why I just keep reiterating, we are consistently hitting new 52-week highs here, but they also might bring this down back to the mid-high 20 range. So if you're an options trader, in my opinion, I might just watch this one. I don't know if I would step in now with some long-term calls 6, 12 months out. I think I would wait for a sell-off, and I think I would step in. And the same thing with my shareholders. If you're able to buy shares, if you have a little bit more capital, wait for a sell-off. But remember, long-term, you are buying a food company. All of these food companies today, I mean, look at Treehouse Foods having a nice pop. Tyson Foods, slow and steady gainer here. These are the companies that are reaping the rewards. Because remember, the tighter money gets in the economy, there is only a handful of things where the money is going to flow to. And what we always see in rocky economies like this is you see food stocks usually grow, and even alcohol companies as well. So perhaps I'll do a video on one or two of these liquor companies and alcohol companies. But again, short term, I think it might get rocky. But again, market cap is only about half of total revenue that they brought in last year. So I just wanted to bring this to you guys' attention, and I just basically just want everyone to keep an eye on companies like PPC and even Tyson Foods, TSN, because in the short term, it could get a little volatile, but in the long term, these are going to be growers because these are our food providers, and people need food. I know it's a little bit of a simplistic analysis, but, sometimes if you guys are following my videos, if you're following the channels, some of my calls have been dead on, and I'm not saying it to brag. I'm not trying to pat myself on the back either, but I'm just letting you guys know that sometimes, it's not always about the charts. It's not always about the news stories that come out. Sometimes you have to take a step back. You have to look at the whole picture, the whole economy, country, and world as a whole. And sometimes simple logic and common sense can show you short and long-term profits, even in a volatile market like this. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply to the comments or any questions or anything like that. If you guys want to BS or chat a little bit about some stocks or baseball, whatever's on your mind, I have my personal Discord in the description now of every video, so you guys can come in and we can chat a little bit in there. But like I always say, moving forward, I wish everyone well. I wish everyone success. I hope everyone's making a couple of dollars in this market. And, we'll keep an eye on PPC, and we'll see how it goes down the line. So thanks for stopping by. I hope everyone has a good day.